Greetings, ladies and gentlemen. This is Houston Trung from thetradingedge.org, and here is your weekly market outlook for March the 16th to the 20th, 2020. And oh boy, what an interesting week, right? So, as the famous saying goes, may you live in interesting times, right? May you live in interesting times. And after a wild week like this, I think a lot of people were wishing that times were a little bit less interesting. Be careful what you wish for. It was certainly a wild week, and let's start that way, because you really have to go back, 40 plus years to see the kinds of losses we saw this week. I believe, if I got my stats right, you have to go back to 1987, Black Monday, to see the kind of losses that the Dow took this week. You have to go back that far to see similar losses. And just share a bit of my experience before we get into the charts and the fundamentals. I started my trading career back in 2007, 2008, and it takes me back to that time frame to see this kind of wild trading. It makes me reflect on that time frame. Of course, there are certainly differences, but it's also a lot in common. Maybe I'll just talk a bit about that as a bit of historical context, and then we'll launch into things. But I recall back in 2007, 2008, it was really the last time we saw this type of volatility, to see this type of market where it nearly felt like a free fall. It's not quite like it was in 2007, 2008, where it was literally a free fall. I think you have to commend the exchanges right now for doing a great job at having the circuit breakers in place to prevent a real panic. In 2007, 2008, there were no circuit breakers, and the selling, if you did not trade that time, it was very, very aggressive. There were days where you didn't know where the market, and if the market was even going to be able to open or be able to close, because the selling was so aggressive. We don't have that yet in these current markets, which leads me to believe that maybe we have not seen the bottom yet. We'll talk about the price action and what a price action bottom needs to look like, but just from a panic investor psychology perspective, we don't have that panic yet. As ugly as it's been, and it's certainly been ugly trading in the sense that people sustain some large losses, especially longer term traders and investors, we haven't hit that panic button yet, that panic point yet, where it looks like all hope has been lost, right? It hasn't reached that time yet where it looks like and appears like there's no one in control. This is what it felt like in 2007, the 2008 crisis, when it literally felt like there was no one at the at the helm of that ship. So that's the difference between now and then. Back then, it was a systemic issue, and if there was a time, it was certainly possible that the entire system, the financial system, could have collapsed. I think we're working in a different paradigm this time around. Right now, it is certainly a severe correction, but the actual fundamentals driving the correction are a lot different. Specifically, this time around, we have a combination of supply shocks and demand shocks that are being caused by, the oil war, the coronavirus, and these fears of global recession. These are certainly all negative things, but there's no moral hazard for central banks and governments to step up to prop up their financial markets. And there's nothing wrong with that, right? So these are, if you want to say it, like the coronavirus, you don't want to have a virus take down your financial markets. There is no free market principle that prevents a government from saying, I don't want to have a virus destroy all the businesses in my country and prevent the economy from growing. So this is a lot different than 07, 08, where we had a number of mortgage lenders, financial institutions who were making very, very risky bets using derivatives and different other sophisticated financial instruments to try to make a profit, and having the banks and the central banks and the government having to bail out those entities. That's a lot different than simple mom and pop shops and other businesses who are getting serious cash flow issues due to a coronavirus outbreak. So I think what we'll see then is that we'll see a lot more activity. We started to see it this week, but you're going to see a lot more stimulus coming out from all the major central banks, the governments of the world, to support the financial systems. The question will be, and this is what you need to watch for, is how would the financial markets react, right? So we saw what happened this past Wednesday when Trump came out and made his announcement on live television and declared that the U.S. was in a national state of emergency, and the markets did not react well to his announcement, and basically they sold that news, right? So this is what you want to watch for now, is if things, or let's say it differently, if investors and traders begin to sell the rips, then you know that you're trading in a bear market. When any kind of stimulus talks gets faded, so let's say we've seen in the past that there used to be buyers buying dips. Now, if we see now the opposite, where rips are being faded, then you're firmly in a strong bear market, and you want to be waiting for the price action to really tell you, when you want to be trying to call that bottom. And so we'll talk about that shortly in the charts. So let's talk about the coming week now, the econ calendar. Should be interesting, econ week. First off, as I said already, expect to see a lot more stimulus announcements, and that's going to be something we need to watch for in terms of the news flow and listening to that news flow. FOMC on Tuesday, so the meeting begins, and so all eyes and ears will be on the Fed as the Fed has an announcement on 2:00 on Wednesday. So I think a lot of people are going to be watching for that and seeing how will the Fed respond. The Canadian Fed, the central bank, already responded on Friday by doing an emergency rate interest cut to 0.75 basis points. So now, how else will the federal government and the central bank, the Fed, how will they respond? Will they cut even further? And what's the language around that? People are going to, that's definitely something we want to watch and see whether or not the market fades that or not. Jobs claims on Thursday and existing home sales on Friday. Some people say we're already in a recession, so that's something to watch for. Are the numbers now begin to reflect that? Just to add to the volatility, there are some companies reporting earnings this coming week. No really big names other than maybe FedEx on Tuesday. That'll definitely be an interesting one to watch. Obviously, FedEx being a part of the transports group, we really want to see how that one responds and see how their books are faring on all these demand and supply shocks. So let's get into the charts now and talk with week that was, what to look for the coming week, and then we're gonna look at the end here where the money's going, right? So which are the names and sectors, well, not sectors, but which companies and securities do we see money flowing into, or is money flowing out of beyond the usual ones that we've been seeing the past couple of weeks? So let's begin as we always do with our VIX chart, and man, the VIX has really ignited. So it went end to end. So that's basically that. What is possible is once the VIX cracked the bottom here, there's a chance it was going to go to the other side of the Bollinger Bands, and that's what it did. So since now this past month, from peak to trough, so the bottom of the month here to the top of the month, it did a 134% move. Now, obviously, it did not close there. It pulled back a bit on Friday, but still, the VIX is up close to 100% for the month of March. So very, very huge move for the VIX product. And now you want to see, does it continue, or do they begin to fade it? Because VIX, once the fear, as I've said in multiple weeks, fear cannot remain elevated forever, right? And once there's a bit of maybe a bit of relief, it's gonna feel like a balloon being popped slowly. So you're gonna see the VIX just basically let all of its air out, and you're gonna see this thing collapse in pretty short order. So we're gonna watch for that now, because if the news starts to come out and it's positive, and we can change that narrative even for the short term, the VIX product will definitely come in. This is not a product that will remain elevated for long periods of time. As you can see in the past, this thing has a natural decay mechanism. So eventually this will become a very, very good short opportunity. And also folks who are already planning the shorts are in some shorts, and that may not be a bad idea, because when VIX goes, it will definitely melt. On the weekly chart, big green bar deep in the Bollinger Bands, right? So if you really want to wait and see what's going to happen when it breaks down, is you want to see if this low can get taken out. So let's move our ranges around here now. This past week we gapped up, we broke above the prior week, gapped up above the prior week's high, right? That's the purple line. We actually came in and retested. I'm just going to keep that there for a second. But this coming week now, we want to see, does it break below there? If it does, come out of that Bollinger Band, and then that's going to be a deeper pullback for the VIX. Not saying it's going to come right back through the range in one bar, but certainly, because there's a lot of unknowns still. But if you're doing this Bollinger Band walk here, you have to keep going. What's possible is, if you're a bull and you want the VIX to go even higher and further, you might get a move like this where it consolidates for 1 week, something down here, right? And then if all of a sudden it pops up again, that would be interesting because you keep going, or it pops up and fails to make a new high, then you can fade in even lower into the range here. So that could be a 1 to 2 week topping process, if not more. The first thing is you want to see this prior week's low can get taken out. That's one one possible scenario. The other one, as I just mentioned there, is if you stay inside week, because that's such a large range that it might take multi-weeks for it to top out. So here in the daily chart, here's what we got on the week, right? So let's zoom in here now. And as we talked about in last week's video, right, you really wanted to draw in your gaps, and you really want to see how it's going to trade around those levels. And boy, it's very, very picture perfect right now. The trading is very, very technical, and there's lots of opportunities for technical traders who enjoy trading shorter time frames. A little bit harder to trade swings right now because the gaps can hurt you if you're wrong. But if you size properly, this volatility can lead to some really, really good rewards. So let's talk about the week. So here's what happened. You have this gap up on the week on the VIX, right? So there was an unfilled gap right there. Okay, so on Monday it gaps up. So there was an unfilled gap that was right here. I'm gonna go ahead and delete that gap now, right? So it took out that gap at 38.72 right on Monday when it gaps up, and then it pulls in. On Tuesday, it comes down even further. Basically retests the prior week's high. See, impulse, pullback. Guess what happens? If it breaks above here, that's right, you're coming after there and going higher. That's what happens on Wednesday. Wednesday, the bad news starts rolling out again, right? Wednesday gaps up, not outside the prior week's, not outside the previous day though, but takes out that high, and now we're going pivot hunting. That's the next pivot there. We had another unfilled gap right here, 43.10. That's now filled. And then on Thursday, so I'm going to delete that line there. On Thursday, there was a gap right here, 48.82. On Thursday, it came within 5 cents, I believe. Actually, 4 cents here, 48.78. The gap was 48.82. And on Friday, we got the gap fill, 48.82. And then we know what happened on Friday afternoon when both the Canadian Central Bank as well as the Fed talked about some big stimulus packages and some rate cuts on the Canadian side. And that caused the markets to rally and the VIX to kind of melt back a bit, but kept the day green, but still negative. So it is doing the Bollinger Band walk here, right? So here, breaks above there, still stays above the Bollinger Band. So even though it pulls back here, it's still closed inside the range. You're waiting for it to break below, right? Did it break below there? No. Did it break below there? No. If it breaks below there now, we can come back into the range here. Okay, so I'm going to, let's at least delete this line here. I'm going to delete these gaps now because those have been filled. And I'm going to draw the unfilled gap that's right there now. Let's put that in green. And so, there we go. We got an unfilled gap there and an unfilled gap over here. So let's put another one in right there for us. We got another unfilled gap right there in proximity, and we got a bunch of unfilled gaps. So if there is a downside move we're gonna have lots to fill, right? So here's the situation now: is that you have a big range, right? So now there's the prior week, this current week's high, and basically this is the current week's low, that purple line right there, right? So you have this entire range to work through in order for it to break below the prior week's low, okay? Or you need to break above there, and that cracks above the current high. So that's the range that you're working with right now, okay? So on the 4-hour chart, let's look at it. Let's bring it into focus here. So here's the situation on I'm gonna wait for a second. There we go. Here's your Monday. So anytime you gap up, all right, at the beginning of the week, if you fall below that, then you have basically a red week. That's what happened to the VIX. You gapped up, and the sellers, they faded the VIX, hoping it was going to break down right away. It did not do that. The buyers actually stepped up like we saw on Tuesday. We had that, a small buying day on Tuesday, and then on Wednesday they popped it back up again to reclaim those highs. This is what it looks like in price action on a lower time frame. It goes inside bar. So here's a Monday, the AM session, PM, stalemate, right? Gaps down on Tuesday morning, okay? Comes back up, inside bar and down, turns green, inside bar. Once you break above there, that's your inside bar reversal. We talk about this pattern all the time, right? So inside bar down, people shorted that. They were hoping that it was going to break down even lower. Folks who shorted down here. Here, the buyers and sellers had a stalemate. That's an inside bar. And then once it breaks above there, anyone who shorts now at risk because they take out that pivot and that pivot. Okay? And now the next pivot is that one. And that turns the week green again. So that happens here on Thursday. Once it breaks over there, the week is back green again. And then, you're going back on the highs. We took out those gaps. So here's what you want to look for now going into Monday. Inside, outside, inside. Love that pattern, right? Inside, outside, inside. That means, we're expecting an expansionary move on Monday. Which way? We'll have to wait and see, right? So, we had some good news come in, or, if you're a bull, you had some good news on Friday that caused a lot of short covering like we saw the previous Friday. If you're short, you had a really good week, and you're not going to give that back over the weekend. So especially if you're shorter term traders, we saw a lot of short covering based upon the that stimulus announcement, and they announced it exactly at the right time. They announced it. This is the way the banks move, the central banks move, and the government moves. They're going to want to get the biggest bang for their buck, and the way you do that is by causing a short covering rally by announcing something either near the end of the day, so the shorts have little time to react and all that they can do is short, or they announce it outside of market hours, which has its own risks. But if usually the best timing is to put it near the end of the day, so you get that forced short covering. That's what we saw on Friday afternoon, with 1 hour left in the trading day, basically. So that's your VIX picture now. So this is what you want to wait and see. Inside, outside, inside. The next bar is going to be an expansionary bar. You want to wait and see how far that takes us, right? So if it goes inside bar and down, you want to see how far this movement goes, okay? So let's talk about the SPY now. Let's go to SPY and talk about the SPY. We're going to look at a longer term chart here on the SPY because it's significant. So if you take a look here, here's the quarterly chart in the SPY. Look what we got here now. Outside quarter, right? So this is the first outside quarter since this one here. October 2014, but certainly this is a way different outside quarter than that quarter. So no matter what, this quarter will remain an outside quarter. Doesn't matter even if it closes up here, right, and turns into a green quarter. The fact is that it's an outside bar now. It's always going to remain an outside bar. So once an outside bar, always an outside bar. It doesn't matter where you close in that sequence. And we know what outside bars mean. It means that it's taken out both sides of the range by definition, and we know that there's been a lot of volatility inside, and that if we take out either side of that range, then there's going to be momentum. And that's what you want to be watching for next quarter. We still got how many days left in this quarter? I think 19 days, I want to say, left in the not 17 days, excuse me, in in Q1. So in a couple of weeks we go out and start planning what the next quarter looks like, and begin to think in our heads what the expectations are around taking out either side of that range. Because look what happens. Okay, so here's the understanding. You have that outside bar right there. Remember in February, we logged in that outside bar. The question was always, what's the next bar after the outside bar? Because if it goes outside bar down, you see what we got this past month. That's the possibility when it goes outside bar down. It's a momentum move, right? And if the buyers cannot defend in this case and push back on the range, the sellers will overwhelm them, and then the momentum will continue. That's what we saw happen this past month when it went outside bar and down. That's what we were marking that range in orange there. We had marked it very clearly that once you break below the prior month's low and people don't step up, it's going to go outside bar and down, and that's momentum. And that's what they did. So now they broke below here. I'm going to move this out of the way. They broke below Jan's lows, Jan 2019. We haven't gotten as far yet as December 2018, like some other indices on the that we're going to talk about. But right now, outside bar down condition. Remember, this outside bar down condition does not end until a prior high gets taken out. This month's high, or well, technically this month's not closed yet. So you'd have to take out the prior month's high for this outside bar condition to this momentum condition to extinguish. So this Momo, I call it Momo down, it's in force right now until you can break above here. So unlikely. So next month, you still have a lot of time for this bottoming process to happen. Because here's what happened, right? Just a bit of recap here. We were looking at this outside bar up scenario, correct? And that was very, very strong move at the beginning, into the beginning of the year, right? It started here in October, and it was a really exceptional move, very strong move to the upside, going into the end of the year, into the new year. But look what happened, right? Once this thing extinguished, it came through here, through there, rip right back through again. These guys were all chasing, right? And they all got stopped out. Anyone got long in this sequence all the way down here, you put your stop down here, you're still safe. But if you put your stop there, you got wiped out. So, peak to trough right now, this is why we're now in a bear market. Peak to trough, I'll just draw it in here. Peak to trough, you let me draw it in there. We're down at one point close to 27%. All right, so this is why we're now trading in a bear market. We closed peak to trough right at 20%, so we're in bear market territory. Bear market territory as being defined as corrections that are equal to or exceed 20%. We are now trading in a bear market. The question is, how much further do we have to go? Okay, so there's your monthly outlook on the SPY chart. Now, if we look on the weekly chart, this is what we talked about last week. How do we break this inside week? And that's the problem for the bulls when it goes inside week and down, right? Because that's momentum as well. The inside week and down triggers, there's your orange line, the outside month and down. So pure momentum, inside week down, and then monthly signal down, outside bar and down. So that's momentum to the downside. Fortunately, the buyers to step up here to really, to buy it back a bit. Otherwise, it would have been a really, really ugly week. Because at one point here, with less than maybe a couple hours left in the trading day, it was down here, right? And it looked like a really big red bar for the week. Now, still red bar, and again, anything's possible. But still, you still have a lot of. It did reclaim much of that range. So on the daily chart, this is what it looks like. And let's just go to the daily chart here. And this is what it's significant to map those levels. So we still have these gaps here. Yeah, I'm going to delete this gap. We don't need that anymore. Let's draw this gap over here now. Where's our last gap? Our last gap is right there. Okay. So here's a very simple price action. Once you understand price action, it's very, very, very significant. And it makes things a lot easier to interpret real time. Not just, in hindsight, but in real time. So remember, the inside week broke the outside month, right? That's that orange line is the outside month. The purple line is the prior inside week. We gapped down, breaking both the outside month and the inside week. That's the purple, orange lines respectively. Look what happened so that gaps down on SPY. They buy it back on Tuesday, right? They buy it back right there. Guess what? Anyone who chased down here is at risk of getting stopped out there, right? So if you sell weakness, usually not a good idea because they're chasing. If you sell a gap down, you have to hope that just keeps going, right? Because if you buy down here, it opens here. It opened at 275.30. If it opens there and doesn't keep going, it got as low as what 273.50. If it pops back up, you're gonna get stopped out. Like, where are you gonna put your stop? This is a massive range. It's like maybe an 8% bar. You're gonna give yourself an 8% stop there. This thing comes all the way back and stops you out, right? But guess what this bar did? This bar retested the monthly low. So the prior month's low, that orange line, that's what it was. So impulse move, retest. If you break below that low there, it's continuation, right? So there's your move, pull back, continuation move. If Tuesday's low gets taken out, some folks are going to be in deep trouble because here, there's a bunch of buyers. This looks like a bullish hammer, right? If they break below that low, it's gone. And that's what happened. They broke below that low. It did not close below there, but after Trump's announcement in the after hours at 8 p.m., the markets flushed, and we got our Thursday, and the Friday was pretty ugly until it was moderately ugly until the final few hours of the trading day. So on a lower time frame chart, this is what it looks like. Now, do we need to really replay that? Not really, but here's the idea, right? So we already talked about it. Outside bar down, right? Here's the pullback, and there's your continuation. Okay, so that's basically the pattern, and you can play it a number of ways, right? You can think about it either, just you're seeing the monthly break there, right? So there's a monthly low, it breaks below it, pulls back in. As soon as you get a low below, as soon as you get a low taken out, so a prior bar's low taken out, that's the end of your pullback, right? So that low there, once that gets taken out here on Wednesday's session, right, then it's short again. And then Trump's announcement is just basically gravy or a cherry on the cake if you're already short, because then you get that gap down, and then that's an exceptional place to take some profits, or it's a pretty big gap down. You made some good money there. So that's the understanding there on the price action. You could look at it that way, or simple moving averages, because things are trending right now. There's your 8 period, touches the 8 period, you break below that low there, and it's it's gone. So that's the trade to watch for this week. Now we're looking at this bar, right? Inside bar reversal on the weekly. If you can break above this prior week's high, that's very, very bullish, right? So if somehow the buyers close right here, way down here, so if somehow the buyers can come back up here and take out that high, that's an inside bar reversal potentially back to the upside. The issue though, however, it's kind of a tough trade, because you still have to get above this area here, the monthly open, and there's your quarterly open. So realistically, even if you do break above this high, the weekly chart may be a reversal, but the monthly chart's still going to look red, as well as the quarterly. So in terms of time frame alignment, your best bet is going to be when the new month, when the new month and quarter begins, because then you're going to have that chance to have, if you can do it, if the buyers can do it, to flip all the charts green at the beginning of the month and quarter. Right now, there's a lot of work that has to happen in terms of buying in order for them to flip these monthly and quarterly levels green. You need to have a close above here for the month to turn green, above there for the quarter to turn green. And so it's a very tall order, because if you just look at it, I'll just draw this Fibonacci sequence in here. If you pull back to here, that's a 50% retracement, and that's quite normal to have these types of retracements in bear markets. So that's the wild thing with bear markets, is that it's very hard to stay short, even if you have the right direction, because the volatility can be so high. So you can be right on the direction, but if you get a snapback that's maybe 5, 10, or 15% in size, it's very hard to keep that short on unless you have an excellent trade location. So here, would not be surprised at all to see this thing snap back here and come back into the 293.39 area. I'm not a big Fibonacci trader, but when markets are trending like this, then it's not unusual for people to begin to use those measurements even more. So that's the bullish case on the SPY. If they can turn this thing into an inside bar reversal back to the upside, again, you still have issues there, but there are some gaps that we talked about already that could potentially be filled here on the SPY. One right there at 274, but 293 is way up here. We still have some gaps up here too. So a gap right up here, right at that 288.52 area. So certainly some gaps that can be filled. Question again, how do you get outside of this prior week's range? Big range there. Would not be that surprising to maybe get an inside week given, but we'll see what happens out of that. There's so much volatility right now that we'll have to wait and see and respond to that. Qs. Let's go a little faster now. Qs, same story as the S&P. So big outside quarter. Let's just quickly draw in from peak to trough what kind of losses we saw. The Qs had dropped at 1.25%. Now we're in the 19% area. So we did recoup some of those losses. Monthly, same thing. Outside bar down. So Momo down. Momentum pattern in effect until a prior high gets taken out. We're not going to see that happen on the monthly chart until at first, at the very likely April. Okay, definitely not this month, because that means you have to come back up here, which I think is very unreasonable. Okay, so you saw the exact same pattern on the Qs. We had a momentum up condition. Now it's Momo down. Okay, Momo up, Momo down. That's what you're waiting for. You're waiting for the moment to extinguish on the downside to see a bigger reversal back to the upside if that happens. Okay, otherwise the monthly bias is still to the downside, even though on the weekly, maybe daily charts, you're going to see maybe upswings. Until this thing changes, you have to remember that you have to be able to balance this outlook with the shorter term outlooks. So that's your monthly chart. Now on the Qs, weekly, same pattern, right? So I think on the SPY, the Qs, and the down, we all had inside weeks like this, inside week that broke to the downside. So there you go. There's your downside break. Once again, looking for a potential inside buy reversal to carry things back to the upside again. that's what price action is saying. I'm not saying that's what's going to happen. I'm saying if that happens, that would be a reversal signal. Not saying it's easy to happen. It's not necessarily easy to trigger, but that's what you're looking for to be, as a potential launch point for a reversal. I'm not saying that's going to happen. I'm saying that's what price action would look like for a reversal to happen. Issue though is that the time frames are not supporting you. You're below the monthly open, below the quarterly open there. So see what happens there. So I'm still thinking that's a lower probability, a lower probability scenario. But if it does, that's what it's going to look like. Okay. On the Qs, so we saw the inside down. On the Qs, exact same pattern as the SPY. So once you start sell like this, they're selling everything, right? They're selling everything. We'll talk about bonds and gold later because they got sold off as well. But right now, everything's correlated, and people are just selling everything. So that's the name of the game. Exactly, they're basically the same situation here. Did we draw it in yet? Here, let's draw our monthly levels back in. Yeah, there's your monthly level. Okay, so the week, I'm just going to draw that back in just for our example here because I just want to show the same pattern, right? So here's your break to the downside on Monday, right? Down, retrace back up. Look, retrace back up, tests the monthly level. There's your weekly level, right? So there's your retest of the break. Your classic second mouse gets the cheese. You break below there on Wednesday, and there's your continuation move. And your Friday, they bought it back a bit. Now look at this line. That black line there, that's your 200-day EMEA. Yes, I use the EMEA. You could use the SMA, but eventually over time they all look the same. Here's what's significant though, is that now, or this is the first time in a long time, we're actually trading below that EMEA. Okay, so finally we actually got a close. So that it closed below there on Monday, broke above there on Tuesday, but closed for 3 sessions now below that 200-day EMEA. All right, so when's the last time that happened? Okay, so here you had a couple days, but they reclaimed it really fast. It's looking a lot different now, isn't it? Because the EMEA there is beginning to roll over. This is not predictive in any way. It just shows the longer term trend, right? So now the longer term trend is beginning to roll over, whereas back here, we did not have that rollover. It wasn't that like that yet. Here, if we continue to trade below the 200-day EMEA, you're going to see this thing roll over deeper and deeper and become steeper and steeper to the downside. So you have to go back a ways. You have to go back to, I think this, what year is this? 2018, when we get that break below. Yeah, here we go. Get that break below. And it takes a lot. Remember, we had that flush in 2018, right at the end of the year. And that's what that's what happens when you trade below. A lot of these moving averages, it causes these moving average traders to keep a stronger bias against the indices. So right now, if you're looking at 200-day moving average, if you're that kind of person, yeah, it's telling you you want to be on the bearish side. So as a bull, if you want to be a bullish market, you're going to have some folks working against you until you can get back above that 200. So that's just understanding the market participants that you're trading with or against. So there's your chart on the Qs. Once again, on the 4-hour chart, there was nothing significant that I wanted to talk about there. So they did manage to nearly turn the week of doji. Again, waiting to see what's the next bar on the weekly chart. Realistically, because the volatility is so high right now, the advice that I've been giving the most to the folks that I coach is just to slow things down. Right, like if you're used to trading, let's say on a 2-minute chart, right, then you might want to increase that to at least maybe a 5 or 10-minute chart. If you're used to looking at the lower time frame signals, you want to be using higher time frames because the volatility is so high. So at this point, the ranges are so wide that you just want to basically just focus on the hourly chart. If you're trading intraday, you just want to basically zoom in and bar for bar. Look at how price is trading bar for bar, hour by hour, because there's literally battles and skirmishes that are occurring every single hour of the day, and that's how you're telling who's in control of that trading day, right? So hour by hour. The funny thing is that the trading itself is yes, it's wide in range, especially on Friday, but a lot of the moves have been happening due to the gaps. Right, so let's say on Monday here, you have a huge gap down. On Wednesday, because of the Trump news, you have a huge gap down, and the market continues to move a little bit, but a lot of the movement happens as part of those gaps. So that's what makes trading a little bit more trickier for folks who aren't using futures. If you're just trading stock, then a lot of the moves are happening overnight. which makes the case for perhaps having some overnight exposure, but not so much that you can get burnt on that exposure. Okay, so let's talk about Dow now, because Dow looks a lot like SPY and Qs. So Dow, let's begin on the 3-month chart, and there we go. So if you go back to the videos, you know how long I've had these lines drawn in, and pretty much it is played picture perfect from one end to the other end, right? We were had that mapped in and saying, look, you're doing this Bollinger Band thing here. I'm not sorry, the Browning formation thing here, and if you fail and you come back in the range, you're coming out the other side. We didn't expect it to happen in 1 month or in a couple of weeks, but the understanding was, yes, you're going to come back through the range. If you fail to stay above the Browning formation, you're coming out the other side, and that's what's happened this past month with a number of the indices. So outside quarter now for the Dow. There we go, 2 months. Outside bar, down, momentum, took out all the stops, right? So it did break below December 2018's lows here in this past week. Okay, so that's a lot of selling. And on the weekly chart, we got the same thing, inside week and down. Question now is, do you get an inside bar reversal this coming week, or do you stay within the range, or something like that, right? Now on the daily chart, exactly the same pattern as the others. What can you say? It is right here, right? So here's your, I'll zoom in a bit there so you can see it. Gap down, they buy it back on Monday, outside bar. So that's significant, right? So coming out of Tuesday, right? So you get the outside bar on Tuesday, that next bar is always significant, because it's going to tell you whether it's going to be a momentum move to the upside or downside, or if the next bar is an inside bar, then it's basically just a consolidation before the next expansionary move. So here, Wednesday, outside bar down. That's momentum, right? That's continuation. And then it finally extinguished that momentum on Friday. We had that short covering. So there was no point in being long here going into this sequence. Now on the Dow chart, one bigger picture I do want to show before we move on. Again, I'm not going to get deeper into each one of these indices because the picture's pretty straightforward right now. You just have to focus on a lower time frame. Like the 60-minute chart, if you're trading intraday, so you know who's in control intraday, or step out and look for the wider time frame charts to signal a reversal. If you're not good at intraday trading in this volatile environment, then there's nothing saying you have to. You can simply wait until you get adjusted to the volatility, or wait till the higher time frame charts catch up and give you a signal. You don't have to get drawn into this stuff right now and feel like you have to participate if this isn't your environment. It's very, very important to understand what kind of trader you are. Some traders excel in these types of environments, and some traders, they do terribly, right? So you have to figure out where you fall in that spectrum, and then just align your actions with that. There's nothing wrong with not making money in this environment. The whole point is just not to lose a lot of money either, all right? So this volatility will not last forever, and there will eventually be some very, very good buying opportunities. And you just want to, maybe if you're not that type of intraday person who wants to be trading back and forth all day long, then you want to be a little bit more strategic and map out maybe some stocks that you wouldn't mind owning at lower levels. Okay, so let's talk about this significant chart though. My friend Lev showed this chart to me the other day, and that's significant. Look at the outside bar here now on the Dow, and this is a yearly chart, a 12-month chart. We finally got an outside year in the Dow. We haven't had too many of these. You got to go back to there, 2015. You have to go back prior to that, 2001, before you have that outside bar. So going into next year, it's again a very far out still, but that's the type of movements we've had here this past year. The Dow basically wiped out all your gains in 2019, right? 2019 was a good year. We were up 22%. Who would have thought that, within 3 calendar months, you would have wiped out all the gains from 2019? And it's happened. It's popped back up again. But anyone who put their stop below last year's lows, thinking, how is it possible for the market to come all the way back down and wipe out 2019? Well, that's how it did it. It did it from up from higher, right? You made some all-time highs, and then you came all the way back down again. Just to put the significance of this, again, the size of the move from peak to trough, 28% move. Okay, so peak to trough, really big range, and now trading down around 21%, 22% peak to trough. So very significant move there. Okay, so let's talk about Russell now. Now we know the charts look very, very similar. So pull up the Russell chart. Okay, so 3-month chart, Russell, we know the outside bar exists in all the other indices, and you saw it here in the Russells too. Look at the broad information. Did we have that drawn in a long time ago? Yes, I had that drawn in a long time ago. Go back to the videos months ago. We had this chart drawn in, and it basically picture perfect, right? Came from one out, because here was the issue, right? We saw this. We said, okay, you're tapping the top of this broad information. Remember we were talking about this like 2 months ago? How do you break above there, or do you? And if you break above there, how do you stay above there? And it started to run into issues, right? So here, this is, I believe this is December, was it not? Yeah, December right there. Broke above, then January, broke above, but fell back on the range. The question was, you going to come back through the range again, or are you going to find a way to get back up? You got to watch out here. Once you break up below Jan's lows, that's an issue, right? Because that's a reversal. Because before that, you had multiple months where you did not break below the prior lows. Then in Feb, boom, right? And this is continuation of Feb, right out the other side. Okay, so there it takes it all out, and when we know the story now, who put their stops in there, they all got stopped out. So now we're on the other side of the range, the exact same question, but in reverse. Can you stay below the broad information and go further, or do you pop back in again and potentially slowly make your way back up to the range? That's what we're waiting for. Okay, so we're going to watch for. But again, you're not going to see a monthly reversal, until a prior month's high gets taken out. Remember, that prior month's low got taken out, and that's what made this possible. What's the chance of the Russell taking out this bar's high? Because that's what's going to be required for a reversal to happen this month. Very unlikely. Now, next month, if you break down below, and it's a small bar, and then somehow in, let's say, May, you can find a way to break above, let's say, April's highs, that will be a monthly reversal. Not saying it's going to come back up right away through the range, because it all depends. If you're below here, it just taps this area here, that can begin to act as resistance. So wait and see, right? We respond to price. We're not trying to predict, with the reversal. We're simply responding to the price action as it unfolds. And I think so far we've nailed it pretty well. So on the weekly chart, no inside week for the Russell. It just broke the range. Gaps down, I just kept on going, right? So this coming week, how to get outside of that range? That's a really, really big range. How to get outside of that, or to get an inside week? I would not be surprised to get an inside week this coming week. But again, open to whatever the price action avails itself to me. So on the daily chart, here's the momentum. Russell's been trading Momo down for a while, right here, right there, March the 5th. Inside, outside, down, 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 down. Finally, Friday, you had a higher high, right? We finally had a high that broke above a prior bar's high. But that's how simple as trading can be right now when you have an understanding of, the price action. If you're not actually seeing, higher highs, when you have a Momo down condition, that means the buy is still the downside on this time frame. Okay, so yes, the swings are really, really large, and intraday you could be going long, but the daily bias is certainly the downside, right? Inside bar down, 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 down. Finally, Friday, outside bar. So you end the week on an outside bar on Friday. What's the next bar? What's the next bar? Okay, so on the 4-hour, it looks like this. Alrighty, so very pretty clean stuff on the Russell. So weeks right here, yep. Breaks down, outside, inside. There's a resolution. Outside, inside, and down, 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 down. There's your outside bar, and it goes outside bar, up. So now we're waiting and seeing what's the next bar. Outside bar up. If it just keeps going up, 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 just keep trailing your stop, or keep trailing, your level there until you get a reversal of that. That's how you know when the 4-hour chart reverses, or at least when it gets extinguished. You definitely need to factor in the time frame alignment, because here you have no choice but to go short, because look, you're below the weekly open, you're below the monthly open, you're below the quarterly open. Here, even if it goes Momo up and keeps going up, you may be above the weekly open depending where the week opens, but until you break above there, it's still a red month, still a red quarter. So just understand that. How about TSX? How the Canadian side fare? Well, not well. And look, if you don't think broad informations work, then just go back to the videos and look at these historical lines. I drew these a long time ago, and you begin to see the understanding of why these things work. It's because there's pockets of liquidity. That's the way that price action works. Price, not just price action, but the markets are a price discovery mechanism. And as you sell off here, we're looking for stops, right? Anyone's looking for stops, and that's why you get these types of moves where you get highs that are higher than previous highs and lows that are lower than previous lows. That's why price works that way. Okay, so for the TSX, how you doing, TSX? Did you get the monthly? Yeah. Did you get the 3 month down? Yes. Outside bar down, wipes out all the gains, you know, from all the way back down to here, 2016. So this is the issue with TSX. You know, I've been saying about it for a while. Is that this structure here is terrible. This stuff here, when it's just choppy, chop, because this stuff here doesn't show any conviction. People are going to rip right through that. They did that one bar. Then this bar took out all that range in one single month, right? So that's, you know, there's your losses on the TSX for the month of March. So to put that in perspective, peak to trough, right? We did that already with the other indices. Down 30% at one point, 30.71%. So like the Russell. So TSX certainly in bear market territory, still trading down over 23%. Bear market territory for TSX. I don't think a lot of people saw that one coming. So obviously the TSX having a lot of exposure to oil really got hammered on two fronts there. So same thing as the other indices though. Inside weak and down. Once again, I'll just draw the lines back in again so we get the understanding. There's the range. Okay, can you break outside that range? And on the 4-hour chart, you know, that was just like the Russell, outside, inside, and down. Okay, so that's your move to the downside on the Russell, on the TSX. Okay, moving forward now. Emerging markets. Okay, so emerging markets, quick 3 month view here. Outside bar like everything else, right? And you know, I'm gonna stop harping on it, but there's your broad information we drew in a long time ago, end to end. And you know this is not backfitted because I drew this in a lot earlier. You see, because my peaks are not touching, right? That means I'm not trying to overly backfit it. So I'm not drawing it in to try to fit the latest data. I haven't moved these lines in months, right? So that's the reality. I have not touched these lines since we initially drew them back here. So, you know, this past month, you know, it's taken it out now, taking all those levels of liquidity down here. So outside, here's the thing with emerging markets. Outside month down. So that's 2 months now of Momo down. Okay, so Momo down. Got to take out that high next month to extinguish the momentum. Weekly chart, inside week down, exactly the same as the other indices. So again, correlations are very high right now. Nothing much to be said about there, but exactly the same pattern as the indices. Gap down, retest the monthly break, and then back down again. Okay, on Friday, and strong, but still quite red on the week, month, and quarter. So here's your potential here on the 2-day chart. Possible inside bar reversal on the 2-day chart here, right? So inside bar down, you break above there on Monday. Break above here on Monday. These are possible inside bar reversal. The issue here is that you're trading below this broad information. That will end up acting as resistance. All right. And here on the 4-hour chart, you can easily break back down again because here's an inside bar and up, so it gapped up on Friday. Okay. If it breaks below here on Monday, it's inside bar reversal. You can expect to come back out and take out this guy's low. So if something negative happens on Monday, whether you gap down or, you know, the weekend news flow isn't positive, then you break below there. That's you gap down. More than likely you'll gap down if it's bad, because that's the way the markets are moving, is in gaps. You break below there, and it's going to come out and take out that guy's pivot. And you're going to be back below this broad information's resistance line. Again, everything is trading with full time from alignment to the downside right now. This past week was all full time from alignment, meaning it was trading below the quarter, the month, the week, and for the most part, that means the easier money is to the downside. You know, yes, there are some rips to the upside, but just look at your charts. The easiest thing was to do a short, right? Not try to find bottoms. It was just basically of catching the right times to go short. That was the easy money. Continue to focus on having that time from alignment on your side. TLT, bonds. Wow, bonds had a rough week. So let's look at the bigger picture. 17 days left in our quarter. Still positive though, right? Inside quarter and up. Yes, I gave back a lot of gains. And look at that. Is that funny or what? So there's your broad information that I drew many moons ago. But once again, it broke above but could not stay above that broad information, right? It's come back in the range again. Still 17 days to go. Maybe it breaks up and stays above here. But for now, it's still a legitimate breakout. Inside quarter and up. If it breaks back into this range again, that's a failed breakout. So if it comes back in here to 146 area, that would have been a failed breakout. And then the next quarter, you got to watch out that this guy doesn't come back in and take out anyone who bought that breakout coming into Q1. But so far, this breakout gave back over half of its gains. On the monthly chart, it looks like this big shooting star inverted hammer type of candle right on that broadening formation, right? How significant is that? Well, right there. Next month, again, this is a monthly chart. You do not want to see this thing break below this low. Otherwise, rip can come back through there again and test that breakout we talked about already. Okay, so bonds certainly came back in a lot. Weekly chart, outside bar of the downside. Wow, what a move, right? So gaps up here, and then they sold it. We'll talk about maybe some of the reasons for that in a second. But man, that just price action wise, gaps up, and they sold it aggressively to create the outside bar. Looked very good for TLT when the market's going to the downside, but they definitely stepped in and sold the bonds and gold. So that was definitely a 1-2 punch, which was shocking to a lot of people, because that's not what usually happens in these types of sell-off environments. Usually the people fly into safety. Okay, so on the TLT chart, what have we got we want to show here? So going into this coming week, outside, inside, right? So that's a very interesting pattern. We watch that a lot, right? How is it going to resolve? Went outside. That's double expansion, compression. You're expecting another expansionary move here. Break up. Very innocent move on Thursday last week. Then Friday, there's your panic move, right? And then on Monday, wow, full panic. People bought more bonds in the pre-market to push it up higher, but then they faded it right away, and it came right back through the range. But that's your Bollinger Band walk, isn't it, right? So that's what I'm talking about. Bollinger Band. Look, the Bollinger Band's down here. Once you break below there, you're coming back out you can come back, not saying out through the entire range, but you're definitely going to come back into the range again. And that's what happened this past week. Remember, that's your prior week's low. It took out the prior week's low, came from top end all the way to this side to take out the range. That's what I mean by reclaiming the range. That entire week was wiped out in one single bar. So for TLT now, we have this inside bar and down situation. So if you break back above here, that's a potential inside bar reversal back to the upside. And that would be positive once again, right? Because here, I'm just going to draw in this level here in blue. So that's a daily signal. My blue bars are always marked my blue bars always indicate daily levels. So inside bar down, right? If you break back above there on Monday, you're going to be trading above the monthly open. That's right there. Okay, so there's your monthly open. That'll break it back above the monthly. That'll turn the month back green again. There's your quarterly open way down here. Okay, and if you open around here on the week, right, you're going to be trading above that weekly level. You're back to full time frame alignment to the upside. This is this type of things you can expect when you have this time frame conflict, right? Week open was up here, month open down there. Look, you came back through the entire thing, tested the monthly open, took out the prior week's low. All right, so that's how you can see that picture. For our chart, this was telling you here's the situation, right? Outside bar down, Momo down, inside bar. The sellers did their best to keep it going. If it breaks below that inside bar, you can keep going, right? We're waiting for a higher high. That could be this bar here. If it breaks above this 4-hour high here, right, immediately they're going to go after that bar there. That is the inside bar level on the daily chart. Sorry, not an inside bar, but that's the inside bar reversal level on the daily chart. That would trigger which would trigger the daily inside bar reversal. So look for that trade. I'll be looking at that trade on Monday because that will be an interesting trade because that will flip the bonds back green. So very interesting trade there. Let's look at gold. Wow, MGC, micro gold futures. What a move on gold. And again, as I said, a real surprise to a lot of people, myself included, because people typically migrate to gold or they rush into gold during these times of uncertainty. But that was not a safe haven. There's only one thing that did worse than gold this past week, and that was Bitcoin, digital gold. I'll talk about that in a few moments here. But the good news for gold bugs is that you still got the Momo up condition on the quarterly. Quarterly up, so outside bar up, inside bar up. Breakout fails now though, right? It's come back into the range. So you still got some quarter left. You still got 17 days. But the fact is that you're not trading above that breakout area anymore. That means so right now the breakout has failed. You still got time though. Issue that you're fighting this thing. You're fighting this outside bar that went down on the monthly chart. So no matter what, you're gonna have a red month. Not red month, but an outside bar on the month. Okay, so outside bar on the month. The question again is gonna be, what's going to happen next month, right? So that's the weekly chart. But next month, what's going to be the next bar, right? Next month. Inside, breaks out one side or the other, or another outside bar. Yeah, right. And the week here, outside up and outside again. Okay, so that's your move on gold. So very volatile. So now you need to see what happens here. Look, it tested the quarterly, monthly open right there. So that's not the monthly. This is the monthly open here. Broke below the monthly open, and then you trading here, testing the quarterly open, right? So you turn that quarter red for the time being. So for gold though, there is no, the reversal is a little bit more tricky, because for the reversal to happen on the daily chart, you need to take out that prior bar's high. The issue is the weekly here is that in order for this thing to reverse, you need to have that, to break above that high. That would be momentum up condition on the weekly chart. Okay, so what's the chance of this coming here and going up through there? It's difficult, right? Not saying it's impossible, because these markets are acting pretty wild, but that's a very, very lower probability trade. Ideally, you'd get it in some sort of an inside week this coming week, and then it goes outside bar, inside bar, and then up or down. That'd be an easy trade to take. Right now, to try to buy this and expect it to go all the way through it there again to create another outside bar, that's a tricky proposition, because you don't see that very often. That would catch a lot of people off guard, so that would make the trade very interesting. But I think it's also a lower probability trade, because you're going to be fighting a lot of things. You're fighting time from alignment, and you're fighting just the bias of a lot of people. So something would have to really, really be significant for us to see a second outside week where you go end to end. Maybe you see an outside bar down, right? They break a lower low, and then the next week after that, it goes outside bar down, back up again. That extinguishes the momentum. But right now, like all outside bars, the question is, what's the next bar? Okay, so for the gold, for the 4-hour chart here, nice reversal signal right there on gold here. So here, outside bar and up, breaks below there. There's your reversal. They try to take it outside bar up. Here it goes outside bar, stopping anyone here who try to buy this Momo up condition, and then they stop them out and go right back to the range again to test that quarterly open. Here now, you're going to wait and see, can you break above this week's high? I mean, the last 4-hour bar's high, okay? Because that will extinguish the Momo to the downside. The only issue is that you're still trading that below that monthly open, so not a super, not a trade that's with full time from alignment, so not a super high probability. But again, you can see this thing bounce back up here again and take out test the monthly open. That's something that might be worth looking at. Okay, so let's look at BTC. BTC, boy. Actually, I'll just make one final comment on the MGC chart. This outside bar up condition and back down, this is a this is a tricky trade. Okay, so this is the if you don't trade this shows you that people were offside and got caught and they were surprised because people were thinking it was going to bounce and come up here. This shows you that people got basically got stopped out. So not the easiest trade to take. Because it was going up and then it takes up both sides of the range and you have to get short right away. But that's what caused this panic move to the downside, because a lot of people were caught offside on that trade. Trickier trade to take, no question about that. But that's the understanding of that price action sequence there. That's why it's so significant to understand these outside bars, because what's actually happening here is that people are getting stopped out on both sides of that range. Someone bought the high of this right there, expecting it to go higher. Some people were shorting it, right? They had shorted that before it popped higher, and then some people bought it, but then went back down again, stopping out both sides. So in that sequence, right? So that's the significance of these outside bars. Once it goes outside bar down, though, boom, you can expect that low to get taken out at the very least. Now let's talk about Bitcoin, because Bitcoin, wow, what a sell-off in the crypto space. I had been looking for a reversal in Bitcoin. I was looking to get the long. Thankfully, did not get a signal, but. Did not get a signal to short either, but I was short a number of other coins. At one point on the crypto side, I was short 9 coins going into that day, and now I'm only short 2 coins. So I'll talk about the ones that I shorted in the past week and the setups I took there. But let's talk about the bigger picture for cryptos. Here, let's talk about the bigger picture here. We had an inside bar reversal that failed. Okay, so inside bar and down. This month here, so this quarter, excuse me, it did break above that prior quarter. Okay, it broke above there, but it came back into the range, right? So it tapped just enough to trigger some longs. We would go long there, but it came back above and then turned to an outside bar. So real surprise move there on Bitcoin. Stop, and we would try to buy that breakout here to come back up through there again. On the monthly chart, this is the issue, right? We're watching this. You do not want to see lows get taken out on monthly charts. That's the issue, right? That's something you're always watching for. What, you know, across all securities, is that if you're following the price, you do not want to see a monthly chart low break if you're long and high break if you're short, right? Because that's kind of your last line in the sand. It broke below there, 84.55.1. Let's just draw it in really quickly here. 84.55.1. That should be in orange. Okay, you broke below there, and then you now know the results of that comes right back to the range again. Okay, although you can see it's still tight trading. If you look at the really longer time frame chart, 12 month, it's inside year. Can you see how much consolidation is going on in the crypto space, especially Bitcoin? Big range in 2017, inside, and 2020, as big as it's been, still inside year. How do you break outside of these inside years? That's the big question for the crypto space. So on the weekly chart, big ripping move there. So the prior week, we broke below the month's range, the month's low. So this is continuation, right? Continuation. No higher highs since this month here, this week there, right? So lower low, lower low, lower low, lower low. Just continue to watch for that. When are you going to see a high get taken out? Okay, so on the daily, okay, it's just basically full Momo down since here, March the 7th. Momentum down, down, inside bar, down, 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 and now inside bar here. So this momentum move is still in effect until you get a high that will extinguish that. Look at that brown information. How long has that been drawn in? A long time, all right? And it takes right to the other side. Okay, so that's how nice that move was. Essentially, another way of framing that trade is, well, let's talk about the next one. Let's do the next chart here. I'll show you a couple shorts that I took here now, and you'll get an idea. So ETC, I took that on a Bitfinex. Very nice sequence. So here in ETC, I got short in this sequence. So I was already short a number of 7 other coins, but I added 2 shorts this past week on ETC and on XLM, Ethereum Classic. So here I was watching this chart. Here's Monday, Tuesday. I see 2 inside bars, okay, and we're already trading below the quarterly open, or above the below the monthly open, but above the quarterly open. So at the very least, I'm thinking if this thing works, it's gonna at least touch the quarterly open. So I don't want to take I could take the daily signal, but I prefer not to. I prefer to get into it on reversals. Here, you break below the 200-day moving average. All right, so you're below there now. You're trading below there. If you break below this level, that blue level there, you're gonna go after that pivot there. If you break below that pivot, that turns the week red, because that's the purple line there. That's the weekly open. That will turn the week red. That means anyone who's looking at the weekly chart will see a red week. So now I'm looking at the 12-hour chart now for my actual entry. 12-hour chart gives me this sequence right there. So there's your blue line. That's your inside bar low on the daily chart. Here it goes inside bar on the 12-hour up. I get in right there below the low of this inside bar. Inside bar reversal to the downside, right? So there's your sequence. Stop goes above that inside bar, breakout to the upside, low, right? So there's the move, goes all the way down. That was a plus 8-9 hour move on that 12-hour chart. So very, very nice breakdown there. Did not expect it to happen quite so aggressively. I was expecting the quarterly to happen. I think it was going to be a slow fade, but it's nice to see it happen in basically 1 or 2 big bars. So that was a 30% move on ETC on that March 11th date. Okay, so the other one was XLM. Very, very similar sequence. Using all the same principles that we talk about in these videos. Bitfinex again. Where's my Bitfinex? Here it is. Okay, so yeah, so I'm not going to do too much in terms of the perspective setting, but I'll just show it to you here. So my bias is down. It broke below the monthly low already. So that was the monthly low. We already broke below that monthly low. So I'm not going to drop you. I'll just let you, I don't want to spend too much time on doing that. But here's the setup. So here, right there, the weekly low is weekly opens right there. If it breaks below this blue line, that will cause a reversal on the daily chart. they're going to go after that pivot there. That will turn the week red, just like they said with the other picture, right? ETC. I take it on the 12-hour chart right here. Outside bar, up, up. That's your Momo up condition. If this low breaks, that Momo will be extinguished, and then they're going to fade the guys who bought that breakout, that Momo breakout. Immediately will turn their week red, and that's what happens here. Boom. So then you can play very tight. This is how I like to take my trades. Take it pretty tight, and there, that moved to there, right? So from here to there is your stop and entry, and then that moved plus 8, 9R, and especially on that one day there where it moved 31% in the span of like 60 minutes. Okay, so very, very nice move on cryptos. People ask, how do you try cryptos? It's so volatile. You get an understanding of how I'm doing it with the price action. Okay, so let's just cover some final things before we wrap things up. And I'll just make one quick comment as I did forget to talk about it while we were on the topic. Actually, maybe I'll just do these quick names first, and then we'll wrap up with some of these thoughts. So let's see where the money's going, right? Before we wrap things up, where has the money been going? And we all know, from the headlines that obviously any names exposed to travel, services around travel, financials, these are all things that have been getting beaten up, like cruise lines, airlines, gas companies. But what else has been going on? So where else is the money running? So here's some of the dogs. GBTC, let's go to the daily chart. That's the Bitcoin ETF. Not really ETF, but in terms of Bitcoin, you can buy this kind of Bitcoin product on the stock market, and this thing has been trending aggressively to the downside. So big money leaving the crypto market. Here's another name in the crypto space, Riot. They're a crypto miner, and man, they've been getting beat up badly. This past week, down over 30%. They were trading at 130, I think, on last Friday. This Friday, they're only down. They were down to 70 cents. So nearly a 50% haircut there for Riot, trending down aggressively. Gold. What can you say? We talked about GLD already, or Bitcoin futures. Man, this thing has been getting crushed, right? Look at the GLD chart. Outside bar, down. Wow. Money flying out of there. Some of the names, I can't remember the last time I saw things like Nugget perform like this. Nugget was down like 70%, 46% on Friday, and 23% on Thursday. 36% on Thursday. So that's over 70%, close to 80% in 2 days. So they've been rushing out of gold miners. Not a good place to be. Not a good place to be a gold bull and be too have too much conviction on that trade. Get out. Okay, so that means the junior miners getting crushed as well. These are obviously triple leveraged. So you definitely don't want to be holding on to these if you're wrong, because man, they were getting crushed. This thing down 120%. How's that? No, not down 120, but down 60% that day. Down another 65% on Friday. Same thing. No repos if you're in silver. Same thing. SSRM. Yeah, getting destroyed. Starting the week at 16, ending at 11. TLT, we talked about this one already too, right? But another strong trend to the downside. People pouring the money out of TLT. Also, tech getting slammed. Well, everything getting slammed to be frank. But some of these names were getting the brunt of it. MDB, MongoDB. That's a database company. Square, the payment processor. Getting crushed. So Square, money leaving aggressively. And Etsy, another online retailer, also saw the trend. What I'm measuring here is the Sharpe ratio. So it's a modified Sharpe ratio with a look back period of 5 to see how aggressive the trend was to either the downside or the upside, to measure the money flows going into these names. So just to give it some context, right? So here's the thing. So when markets sell off, as I've already said, the correlations between all asset classes tend to increase. So as much as we've been taught, to create these balanced portfolios where you might have, a 60% split between stock and 40 bonds, or whatever your age is at, maybe it's 70-30, however old you are. The reality is that type of diversification doesn't really help in market sell-offs, because when markets sell off, it is a function of supply and demand. And market participants, when there's a sell-off, they have to raise cash. What tends to happen is that you're going to have funds and institutions out there, and funds of funds, or not funds, but larger funds who have to make margin calls. So they have a number of positions on their books where if they want to be able to keep them on the books, they need to raise the margin to keep those positions. Otherwise, they risk getting margin calls and getting stopped out of those trades. Oftentimes, it's the worst trades that are getting margin called, and they have to sell their best performing assets so they can pay for the margin to keep the worst positions on. That's the kind of paradoxical nature of things. You may wonder, well, why not just take the loss on those losing trades? Well, oftentimes it's actually a smart thing to keep those losers on because they've been, maybe the mindset is they're down so much already. Maybe they're actually closer to bottoming than some of these assets that are performing better that are maybe not corrected as far yet. And there is some rationale to that. And in a way, it's kind of like doubling down, right? It's kind of like that Monte Carlo simulation where every time you lose, you double your bet. And so long as you don't, you still have money, you might end up winning in the long run. However, if you run out of money, basically you're going to be insolvent. But that's the game that a lot of folks play, where they're going to basically average down on these losing trades in order to eventually, if the market bottoms, that's always the game. It's if the market bottoms, they can time it properly and they have enough liquidity and they can remain solvent that they're actually going to be able to make money on these losing positions as things are going down. But that means you do have to sell good assets to pay for bad assets. And that's what you've been seeing lately, is you've been seeing things like gold and treasuries, which had been holding up very, very well up until the last couple of weeks. They have been getting sold off aggressively. Now, why are, that's just the simple supply and demand mechanics of how things work. Obviously, there could be a lot more backstories and narratives and fundamentals around why these things are happening, right? There's obviously the ideas that maybe, gold not being a great hedge in a deflationary environment. Maybe the Saudis are selling treasuries, yada, yada, yada. There's a lot of these situations like that could be a backstory. But the reality is that we may never know the exact reasons why people do what they do. But what we do understand is the price action and why these things move, and that we need to get out of the way when certain levels break. Okay, even with time, if you go back and do your research, no one knows to this day exactly why we had that crash back in the 30s. And what were the actual reasons, right? And historians to this day can't exactly pinpoint why some of these crashes occur and why things unfold the way they do. So even with the benefit of hindsight, with dozens and 20s and 50 years later, even and more, we may never have, we cannot have, access to all the minds that are participating in the markets, right? So we can never really know everyone's motivations. And so at a certain point, you have to be okay with not knowing, and that's the uncertainty that is, that's involved with trading successfully. All right, so let's leave things on a positive note. Let's look at some of the stars. Where did the money seem to go at the end of the week? Well, interestingly, the oil names are getting bought back. Oil bounced a bit, and except for this one here, WTI. Let's take a look here. WTI. No, that's not the one on my list. So here, Diamond Offshore. Pow. Look at the move on. This is the daily chart. Friday, basically recouped of all the losses from this past week and the prior week. So huge move on Diamond Offshore, 165% up on the day on Friday. MRO, Marathon. Same kind of, look, they bought it right back on Friday. That basically the trend is weakening. This is what I'm trying to show, is that the trend has basically weakened significantly on MRO. That means the weekly chart looking like a green one. Okay, so it's a lot of work to do, but that's productive for the oil names. Maybe they found a small bottom here. CLR, same kind of thing. Looks a lot like MRO. The sellers could not push it any further down. Is this consolidation, or did they break it lower? That's what you want to see, right? That's what you want to see, that range here. XOP, so oil exploration, same thing, right? You're trading in a range here now. Okay, so that's a range, that's a box on the weekly chart. Looks like that. Okay, so now is that going to be a hammer that sticks or not? You want to see those ranges, right? You want to see how it transacts in accordance with those ranges. Vail, so some basic material companies started to make a little comeback, at the end of the week. So Vail here, the trend is not as strong to the downside as it was 3 weeks ago, right? So this is getting choppy. That means the buyers are actually stepping up. This is not a free fall anymore. There are actually people actually buying the name back again. You want to see if those ranges hold. Surprisingly, financials actually responding well. So with that big liquidity injection, and the offer credit to companies. Goldman Sachs, look at that big pop on Friday, up 17% on Friday. Just want to look at the 60-minute chart there. That happened basically, in the span of these 4 hours, right? It came roaring back. Morgan Stanley, so look at a bunch of the banks. Another really good day for Morgan, up 20% on Friday alone. And one final one to show. Here's a weird one. Take the cruise lines. So right now, cruise lines are actually kind of interesting, right? CCL, it's been so bearish. Possible inside bar reversal. Not a great setup here because it is full time from alignment to the downside, but it'll be interesting to see if Friday's highs can get taken out. That would create an inside bar reversal. Question is, you still got the monthly open right there. You got a lot of work to do if you're CCL to break, back into an uptrend again. The question first is just how do you break out of this downtrend? Okay, but still, momentum on the downside in CCL. I'm not saying buy the CCL, but it's interesting because this is the pattern. Possible inside bar reversal. Can it break to the upside here? And if it fails, this is just as interesting, right? Because if it fails, you can expect even more downside. So, because right now, outside bar down. No higher high in CCL since that day there, March the 3rd. A good, 2 weeks of trading. Okay, so that's a wrap for the video. As always, if you have any questions, feel free to leave them either on the YouTube comment section or on our blog site, thetradingedge.org. If you like the videos, once again, subscribe. Give us a big thumbs up. And also subscribe to our newsletter. Send out once a week to alert you when these videos come out, as well as share some of my thoughts around trading and other perspectives. If you do like the videos, once again, feel free to share with your friends. This is really an effort to make sure that people are understanding the price action, understanding that you don't have to necessarily try to predict markets. I see a lot of people trying that and getting hurt doing that, especially in these volatile environments. And as I said right in the beginning, if this is not your environment, then don't feel pressured to try to do something that you're not comfortable doing, right? The markets will eventually, the context will change once again, and the markets will, the volatility will subside. And if that matches better your trading style, then there's nothing wrong with taking a sidestep and getting involved when things suit you better. Otherwise, if you are active, then take advantage of this time. This is an exceptional trading environment. If if you're a trader and you know what you're doing, then these are fantastic times. Take care of yourself, right? Take care of yourself. Take care of your mental health so that you can perform well and do so in a way that is sustainable, right? You can't burn the candle on both ends. You could try to stay awake and try to trade 24 hours a day, 5 days a week, because the volatility is so high. But in the end, you actually end up, burning yourself out more, and it's not sustainable in the long run. So, that being said, I wish you all a great trading week. Again, stay safe. Take a step back sometimes. See there are things outside of trading. Yes, trading is in the news right now. But take a step back. Enjoy your families. Be safe and trade safe. Happy trading.